First at 5 tonight, going up. That's the direction of the Bank of Canada's trend-setting interest rate is headed, with a quarter-point increase announced earlier today.
That brings the benchmark to 1.75%. And as CTV's Bruce Frisko tells us, it's a number that will be felt by many Canadians. Bruce?
It sure will, Marie. In fact, anybody with an unsecured line of credit, or particularly one of those variable rate mortgages. In fact, a typical mortgage holder is now paying about $200 a month more than they were just 2 years ago. And experts say that those changes may, in fact, keep some people from ever owning a home.
Good morning, Centum Home Lenders. How may I help you?
It's a scene playing out in mortgage offices across the country as Canadians try to figure out what the latest hike is going to cost them.
Which is correspondingly 2% at a deposit rate of 1.5%.
In fact, when the governor of the Bank of Canada makes an announcement about its benchmark rate, it's all hands on deck for Clinton Wilkins, who now admits some borrowers may be more comfortable locking into a fixed rate.
Prior to this, the last 4 increases, we were really telling people to hold the line. And now I think that there's a decision to be made in everyone's household. You know, what's the best fit going forward?
I get it that it can be difficult for some, but the reality is that the economy is running at its capacity.
In raising rates for the 5th time in 2 years, the BOC governor says the central bank is simply adjusting the rate to bring it back to some semblance of normal.
So basically what we're talking about is the last element of that normalization process, getting home, as we've described it.
For a typical mortgage holder, the change represents about $35 extra a month. Not the end of the world for engineer Jason Angel.
It probably won't affect me, but I do have colleagues and friends that they would be affected because $40 here, $40 there adds up.
It all comes down to the formula, yeah.
Realtor Shane Anderson says the Halifax market remains solid, but that few extra dollars may be enough to shut some first-time buyers out completely.
If you're a first-time home buyer and you're right on that cusp of being able to afford the mortgage and being qualified for the mortgage, it really can make a difference in you getting that mortgage or not for your first home.
So it's definitely going to negatively impact Canadians today, and it's going to impact people here in Atlantic Canada.
Nothing today, but looks like tomorrow afternoon at 4:30.
So the calls keep coming for the time being. All hands on deck for people in the mortgage business who've got a lot of questions to answer in the days ahead. And, you know, a new survey released just yesterday suggested 44% of respondents said they are within $200 of insolvency every month, and another 27% said they have absolutely nothing left over after the time they pay the bill. So, of course, that extra $35-40 is significant to a lot of people out there, Maria and Jay.
Oh, it sure is. Thanks so much, Bruce. CTV's Bruce Frisko reporting live for us in Halifax.